President of Sales here at Angel Oak Mortgage Solutions. We have over 500 registrants for this, so we appreciate you taking the time out of your day to learn more about non-QM. So give us we'll get started here about a minute after the hour here. So thank you for joining us. See a lot of people still logging in. We're up over 100 people logged in already, so thank you. We really appreciate you joining us here today. Get started here in another, let's say, 30 seconds. Just a couple of housekeeping rules, because we get this question all the time. Yes, this is going to be recorded, and before end of day tomorrow, you will have this recorded for you. So this is going to be really interactive. This is about our 14th or 15th one we've done, and it's all about the questions you get, and we're going to try to answer all your questions. So still a lot of people logging in. We really appreciate it. All right, still a lot more. Okay, we'll give us another 20 seconds, and then we'll get started. Wow, great participation. Another 5. Okay, let's get started here. Thank you very much for attending. My name is John Jiminot. I'm a Regional VP of Sales here at Angel Oak Mortgage Solutions. With us today, what this is about, it's strictly about programs. It's not about the 35 securitizations we've done, the 11 securitizations post-COVID, or the 3.5 billion in securitizations. It is strictly programs. So without further ado, I want to introduce our 2 subject matter experts. First, I want to introduce Annie Jensen. We're about as far away as we can get today. I'm here in sunny Miami, and Annie's up in Seattle, Washington. So Annie, please introduce yourself.
Hey everyone, thank you so much for taking your time. I'm really excited to help you all have a better understanding about non-QM. I have been with Angel Oak now going into my 7th year. So been with the company for nearly the beginning, and it's been a fun ride to watch non-QM from the very beginning expand into what we have now and what we're going to be discussing today. So really look forward to answering all your questions, and we'll get going here very soon.
Right. And then our other subject matter expert is Chris Taylor. Chris is out of Colorado. Chris, please introduce yourself.
Hi, I'm Chris Taylor, Denver, Colorado. Been with Angel Oak about 6 years now. Just absolutely love this job, and really looking forward to talking with you about what we love to do, our non-QM products. I'm going to be talking today a little bit about bank statement loans and answering any questions. Looking forward to being here.
And both Annie and Chris are top producers here at Angel Oak, so we have the best subject matter experts in our company on this call today with you. So really, please put all your questions in the question box. We'll get you answered, and we're going to roll right into programs. But before we do, we're going to take a quick poll here. And the question on the poll is, how many of you have originated a bank statement loan in the last 12 months? So we'll give it about 15 seconds before we dive into some highlights of our bank statement program. A couple more minutes here, no, a couple more seconds, sorry about that. And I cannot see the poll. Wow, this is really interesting. So 81% of you, and thank you for your participation, but 81% of you on this call today have not originated a bank statement loan in the last 12 months. So huge opportunity. We're going to help you get started here. Chris, please share some highlights, share with our audience some highlights of our bank statement program.
Thank you. Bank statement loans are definitely my favorite product. Been doing quite a few of them over the last 6 years, and the product has really evolved. It's a really well-oiled machine now, and how it processes and how easy it is to do a bank statement loan. But in general, you have to look for a borrower that has been self-employed for 2 years. That's the #1 thing you want to look for. Whenever I get a call from a new person who probably hasn't done a bank statement loan, they're always, the first thing they start talking to me about is their tax returns. And what I try to say is, let's just forget about the tax returns, because this is a different type of loan product. The borrower, we look at the borrower's ability to pay through bank statement deposits, and that's how we view the borrower's ability to pay. So we have two types of bank statement loans. We have a business bank statement and a personal, and we can look at 12 or 24 months. And just so you know, the pricing is the exact same on a 24 business as it is to personal. It's the same on a 12-month personal and business. But when you're talking to your borrower, one of the things you want to ask them is, where do they deposit most of their income or money in their business? And because a lot of borrowers you're going to find are going to have multiple bank statements. And I think the first thing you want to do is find out if they're self-employed, and also if they where they deposit most of their money. But essentially, this product works is that we establish the income through their bank statement deposits. That is the income that we use in the underwriting file, and it works just like a regular loan from that point. We can do a loan from as high as $3 million with a credit score. We also have credit scores as low as 600. We now allow cash out on bank statement loans up to 85%. All of our products are a 30-year fixed, which is great, and the rates have never been lower than I've ever seen on a bank statement product. I mean, I can't even believe sometimes when I'm quoting a rate in the 3s on a bank statement loan, when we were 4 or 5 years ago in the 6s and 7s. So it's just a great opportunity for a borrower who is self-employed. And if you think about your self-employed borrower, who is going to buy, let's say, a $2 million house? It's usually a self-employed person. Self-employed borrowers have been turned down multiple times. They've gotten discouraged, and they don't think they qualify. And as soon as you actually close one of these bank statement loans, you have an amazing referral source from that point. A lot of the realtors that you talk to, generally speaking, their lender usually doesn't work with bank statement loans. So there's just tremendous opportunities to build referral sources. But I know I'm kind of going on a tangent, and we're talking about the product, but it's just an exciting ability to be able to have a loan that possibly wouldn't have been a loan prior to that. We can do purchase cash out, rate and term on owner-occ investment and second homes. We also offer a 40-year interest-only option, which is terrific. It's a 10-year IO, and then it's amortized for 30 years. The other kind of features that are really good is that we do have seasoning requirements. Bankruptcy, for example, is now down to 2 years, and foreclosures. We do allow a prior forbearance from COVID, and generally speaking, the way the process works is you send us the credit, the 1003, and the bank statements. You can send it in a secure portal where you don't even need a password or login information. We send that up to our team, and usually within 24 to 48 hours, we'll have an income calculation for you. Sometimes there's a little bit of back and forth with that to try to maximize the borrower's income potential. And once that's done, that income is certified. That's the income that the underwriter uses in the underwriting file. So when
Chris, I'm gonna kind of stop you there, because you've answered a bunch of questions here today. So yeah, so the bank statement team that calculates the income for you, that's great. You've answered Sarah's question here, so that's great. Couple other questions, Annie. How do we calculate the the expense ratio factor?
Perfect. So when we're going through the pre-qual phase, what we're going to do is we're going to send out a business questionnaire. This is going to be about 5 to 6 simple questions the borrowers can fill out online. But what we really want to do is have a full understanding for their business, what type of industry they are, and how large is their business. Those are going to be the two main driving forces that are going to determine the expense factor. So right off the hand, we're going to use 50%. But after we review it, we may use up to 70%. So that's more for businesses that are large, retailers that have several locations, businesses that have more than 20 employees. So you'll be working with your AE. Now, let's say we're working with a very small business and they work from home. Let's say maybe they're a CPA or a consultant and they really don't have a lot of expenses. Then we can actually use up to 85% of those deposits with a 15% expense factor with a CPA letter. All the CPA needs to verify is that their business expenses do not go over 15%. It could be maybe they don't go over 30%. So whatever their business expenses are in the CPA documents, that's what we will back out and allow them to use more income. So great question.
Yeah, so thank you, Annie. Really appreciate it. I got a question. I have a question here from Ari, who's closed loans with Stacy Flanagan in our Tampa St. Pete area. So Ari, thank you very much. Chris, help Ari understand a little bit more about 1099 borrowers and how we handle those, please.
So there's circumstances when a bank statement loan isn't going to work. And so we have a feature in the bank statement loan program where we will allow a 1099 borrower, and that's a person that receives a 1099 paid to themselves from an entity. Let's say a realtor with Remax, for example, would get a 1099. We'd be able to use that 1099 1 to 2 years, and we could average that. And then for the year to date, we either use a year to date pay statement or bank statement deposits from their income, and it operates just like a bank statement loan. We use an expense ratio. It's just another great way to calculate their income.
Right. So hopefully that helped out Ari. So Ari, again, we will try to answer everyone's questions. Yes, this is being recorded, so we will get this out to you before end of day today. Thought so good to know. Thank you, Ari. I really appreciate your interaction here and everyone's questions coming in. Keep them coming, please. Annie, maybe touch a little bit more on expense ratio. I still have a couple questions coming in. Maybe what we default to. I know you mentioned we maybe could use 85%. Talk about also, Andy, if you don't mind, also touching on personal bank statements and what we can do from a personal perspective too.
So very good question. So personal bank statements, if the borrower has a business account and we can document that with 2 months of their business statements and we can fully see that the business expenses are coming out of that business account, then that will allow us to use 100% of the deposits going into the personal account. Now, let's say they don't have a business account, let's say maybe they're doing business as, or maybe they are the 1099 borrower and all that income's coming in directly, we still have to apply that expense ratio. So then we will underwrite the personal statements just like we would a business account. We will still ask them to fill out the business questionnaire and then also review for the expense ratio.
Right, great. And really, Chris touched on this when he was providing a high-level overview. Again, don't worry about calculating those bank statements. We have a team of experts that is all they do is they calculate those bank statements for you on your behalf. And Chris also mentioned this. This is the income that's going to be used throughout the entire underwriting process. So, before we pre-qualify, before we do a pre-qual, we're going to know what income that borrower can use to go put a pre-qualification out on a purchase. So couple questions here by Rob. Rob, this is a great question. He's had the dialogue with the self-employed borrower and he's showed them a rate of 4 and the borrower is still belly aching and he told them to go to your CPA. So Chris or Annie, anything you can add, maybe some tips and tricks on how you've sold, maybe a little higher than conventional rate. I know how I would do it. I would tell them, try qualifying off your tax returns. Oh, that didn't work? So, but go ahead, Annie or Chris, if you guys want to share some tips and tricks that you guys have used to sell a borrower.
So I have a broker and he's just flat out blunt. He's like, well, you can take that money, you can be paying the taxes and apply that towards your down payment. There you go. So that's always seemed to win for him. And then you can always, my favorite thing is show them the pot at the end of the rainbow, the pot of gold, is say, hey, next year you can file your tax returns. This will be your rate, going conventional. Let's get you in the home now. Home prices are on the rise. And then let's put together a plan to refinance and get you into that lower rate. But let's get you into the home now. So I have a lot of them that do focus on, the fact that home prices are going up and let's get them in now.
I also want to add, I don't think we've ever been at a time when the difference between a conforming rate and a bank statement rate was so low. That margin is so narrow now. It used to be, if let's say the conforming rates were 3%, the bank statement loan was 6 or 7. Now we're looking at, anywhere from 3 to 5%. It's just really a narrow margin. So it's not as difficult of a sell right now.
Yeah. And, we always come back to its payment, Rob. I don't know what your borrower was qualifying for. If that borrower is looking at a 90%, but Chris mentioned this also, our 90% one loan does not have mortgage insurance on there. So that's another thing. Talk payment to payment. So it's really not that different. A couple other quick questions. Sorry.
Do you mind if I interject really quick, John? Just because you said payment, which is awesome, we also have an interest-only option. So point out that interest-only option and let them know, hey, this gives you an option. You could do the interest-only payment or pay a little bit more and have it go to principal. So great selling feature as well.
Yeah.
And on jumbo, most of the bank statement loans are jumbo loans, and I'm being told that there's not a lot of interest-only jumbo products out there. So it's a great feature.
So Rob, hopefully we've given you some more ammunition to, combat those or just, overcome those objections from some buyers. We've got some really detailed questions coming in here, Chris. Give us, what's the lowest score we'll go down to on a 90% LTV?
700 score.
Yeah.
And we're, again, in our world, we do look at exceptions. So I don't want to say that we would make an exception, but we do look at exceptions if we are running, a few points below that. We always consider those.
Yeah, and I'm glad you brought that up, Chris. In the last year and a half, we've had 38 enhancements to our programs. So, and really about 30% of the loans Angel Oak closes don't meet our guidelines. So as Chris just said, we get a lot of exceptions. So if you're at a 685 score and everything else, you've got great compensating factors, maybe we can get that 90% LTV. Annie, another really good question. What's the seasoning from foreclosures or bankruptcies on our bank statement program?
Great question. So seasoning for foreclosures and bankruptcies on our bank statement program, let me take a quick look, is going to be, just because you don't see them all that often with these borrowers, is going to be 24 months.
Yeah.
24 months, Chapter 7, Chapter 13, foreclosure, deed in lieu, short sale.
Yeah. So Sharon, hopefully that answered your question. We really appreciate these great questions coming in. Salvador has another great question, Chris. What if a borrower has two different businesses?
So that's a really great question, and I'll just make a comment. A lot of times when I get a new bank statement loan or a bank statement loan in from a new person, I get a bunch of statements. So it's really helpful to kind of figure out what the borrower does for a living. A lot of these self-employed borrowers have multiple businesses, and the good news is we can actually do two different bank statements with two different businesses. And I've actually got an exception to do three before. So the answer to the question is yes, we can do both of those businesses with those bank statements. The one thing to look out for, the one thing that unfortunately we cannot do is when they move money in between the businesses, makes it really difficult to understand the income. So, but a lot of times we can, yes.
Yeah, so great question, Salvador. Hopefully that answered your question there. Acre limits, Katie, we'd like to stay below 10 acres. Up 20, over 20, it's going to be pushing it. I don't know if Annie or Chris have any real life situations that you were able to get done, but we really like to stay below that 10 acre. Okay, great questions coming in here. God, I'm sorry, trying to scroll through some of these. So we talked about this. We have a 12-month bank statement loan. Does that mean the borrower can be self-employed for 12 months, Annie?
So no, they need to be self-employed for 2 years, and we need to document that. So we will be looking at business licenses. We will be doing a 401 lookup. Depending on what type of business, sometimes we do document with the CPA letter. So 2 years is the minimum.
Right. Still some other great questions coming in here. What's the lowest, Chris, what's the lowest credit score we'll go down to on our bank statement program?
600.
Right. And again, we got
70. And what's interesting is I don't see those ever. I'm sure they're out there, but I hardly ever see something like that.
Yeah, no, it's, just to put things in perspective, people, people try to put non-QM or non-agency in that old subprime bucket. Our average credit score is over 700. Our average LTV is less than 75%, and our average DTI is 34%. But I know I would lend that borrower my money, right? So, so these are really great borrowers. And how great would it be to your borrower writes off, 60% on their taxes, and maybe they only qualify for a $200,000 house. And I think, Annie, you know where I'm going about how we can. Go ahead, Annie, take it away.
Well, lots of times you can qualify them at a much higher purchase price. So, if they want to buy that 500, 700, $1 million home utilizing the bank statement program, it's going to let them do that. So sometimes it's all about just getting them in the purchase price where they want rather than what they qualify off the tax returns.
Got it. We have a really, really great group on this call. Chris, what if the borrower only, they're getting specific here. What if the borrower only has 2 credit scores?
Well, we could use the lower of the 2 scores. I guess it just kind of leads me to one other question is sometimes, we look at trade line requirements, and our minimum trade lines is 2 trade lines for 24 months and 3 for 12. So if we have a limited score issue, it's always good to look at the trade lines.
Yeah. Hey guys, I'm going to have to do one more question. Annie, what if the spouse is W-2?
I love this question because you do see these scenarios very often. So if the spouse is W-2, not a problem. All we're going to need is their most previous last 2 years W-2, so 2019, 2020, full months pay stub. And so husband will be underwritten under those, and then wife would be underwritten as self-employed. So even underwriting with the W-2s and the pay stubs, we will still not order a 4506. So it's very easy to combine the two. I've done lots of loans combining the two.
Yeah, so Hida, hopefully that answers your question. We're about almost 25 minutes after the hour. And again, as I mentioned, this is being recorded. We will get every question answered. If not by Chris or Annie, we will find out who your account executive is, and we will get them to answer your questions if we didn't get to answer them. So, and Roberto, I know you want to know about the Foreign National and the I-10. We're going to get there, I promise you. So just be patient. We have a lot of questions about rates. We're going to show you some really great tools we have. So, so let's talk about our next most popular program. I've got to move a few things around here on my screen, so I apologize for this. Let's talk about our investor cash flow, Annie, but before we do that, we're going to do another poll here. And the poll question is, how many of you have closed a investor cash flow or a debt service coverage program in the last 12 months? So we'll give it a few minutes before we have Annie take us through the high level of our investor cash flow program. So, wow. So, all right, thank you, and really appreciate, over half of you participated in this, so thank you so much. But again, we talk about a lot of opportunity. Now, before I let Annie loose here, the Mortgage Bankers Association is predicting 62% decrease in refis. So really appreciate all of you being on this call because you're really concerned about 2022 production going forward. The opportunity here, only 18% of you have closed a debt service coverage program in the last 12 months. We have an 82% opportunity here. Annie, go ahead. Give us some highlights of our investor cash flow program.
Okay, so this is my second most favorite program. And the way that this program works, I'm going to tell you what is not needed on the 1003. First of all, there is no employment listed on the 1003 and no income listed on the 1003. So if you are working with that person and they are trying to buy an investment property and they do not qualify conditional, maybe it's a DTI issue, maybe they already have more than 10 properties financed, this is going to be the program for them. We are okay with them having more than 10. They can have 40 properties financed. The way this is going to work is we are going to take the market rent off the appraisal, and our mortgage payment can be up to equal to market rent at 80% LTV. We are not going to review the income. All we want to make sure is that the rent is going to cover the mortgage payment. Now, let's say we do have a circumstance where maybe that mortgage payment is more than the rent. If we're at 75% LTV or below, that's okay. We do not calculate the DSCR. We just have a quarter hit to the rate for no DSCR. So other benefits of this program, working with your investment borrowers, is you can close title in an LLC. We can use funds from a 1031 exchange. We can go up to 4 units. And most popular is after 6 months, we can use the new appraised value for a cash out. So if you have a borrower and let's say they did that hard money loan to get in and they wanted to do a fix and flip, maybe now they have changed their mind, then now you can refinance them into a long-term loan with this program. Since a lot of you guys are fairly new on this, 82%, I've been working with brokers who have specialized in this program. So where do you find these leads? Where do you get these borrowers? First of all, go through the phone book, look at property managers, reach out to property managers. They know what their customers are looking for. One of the biggest things I've been doing right now is I've been doing a lot of cash out refinances with investment properties, especially on this program. We'll go up to 75% LTV cash out, up to 500,000 cash in hand, 1.5 loan amount. So there's a lot of investors out there who are actually taking out equity because they're preparing. They want to go ahead and buy more investment properties. They want to keep on filling up that portfolio. So these property managers know this. Second thing, especially up in Seattle, hard money lenders are very popular up here, and I know a lot of them. They're not in business to hold these loans long term. And a lot of these borrowers don't even know that this loan exists. And so reach out to your hard money lenders. They have loans they want to get off their books. And this is a great way to fill that need. Now, another thing I do want to point out is this does come with a 3-year prepay. So if the borrowers do want to have a lower prepay terms, we do allow that. You can work through that with your AE. And another huge stipulation is they have to own a primary residence. So especially if they're a first-time investor, we're okay with that, but we will be looking at red flags too on that loan. So it has to make sense. Do they live in a $700,000 home and their first time is investment is $200,000? That makes sense. They have a $700,000 loan, they want to buy 1.2 as investment, doesn't make sense. So these are things that your AE will be working with you on the pre-qual. So I'm sure you have a ton of questions coming in. So what can we answer?
We are getting a ton. And Chris, if you can help Melissa a little bit with the LLC. I know we said we can close in an LLC. Kind of give her some of the particulars that we have on the LLC, please.
So we allow to close in the LLC up to 3 members. All the members in the LLC have to be on the loan. Keep in mind the loan is still in the borrower's name, but we allow it to be titled in their LLC. We don't allow corporations, strictly just an LLC.
Yeah, great questions here. What's the max LTV, Annie, and with the max LT with the lowest credit score? I guess does that help you out, Annie?
Max LTV with the lowest credit score. So we will go up, we will go down to a 600 credit score. Max is going to be 70% LTV for the purchases. And then with a 640, we'll actually go up to 80% LTV. So really strong credit scores for the purchases.
Yeah, so Chris, let's talk about how this, almost everywhere across the country, how hot this housing market is. And what if a borrower, can't meet that contract date? Let's talk, I know we do purchases, we do refinances. Cash outs, Annie talked about cash out. What about delayed financing, Chris? We had a question here about delayed financing.
Well, it's great on most of our programs. We allow delayed financing. I believe it's up to 6 months, where we will lend on the exact amount that they would have qualified for as a purchase. If they paid cash for the property and they qualified for 90%, we will allow that loan to fund up to 90%, and we don't consider that cash out. So it's a great way for them to get their money back quickly.
Yeah, and still get the house that they wanted to purchase. So just again, if we will get all your questions answered. This is being recorded. Delayed financing has really increased over the last year and a half. Just some other things to also think about. This program came into. It's been a popular program for a while, but in the the end of first quarter of this year, FHFA, capped a lot of what you could have for second homes and non-owner occupied at 7%. Now they lifted that in the mid to late summer. Rumor has it out there that that could be coming back in 2022. So if learn how to close these deals now before everyone wants to close them, and you're going to get capped possibly again on your what of your portfolio can be non-owner occupied and second homes. Ari, we love you. I love that you're working with Stacy. We're going to show you some marketing tools. Ari's asking about the marketing flyers. He wants his team to put this together. So Ari, we appreciate your business. We're going to show you how you can grow your business from today on. So thank you. Some other questions coming in here. Ari's laughing at me now. He's on a roll. So I love it, Ari. Any other? So Ari, I'll give you an example that Stacy has used in the past. She had a borrower that had 10 properties. Now we are kind of capped at 5 or $2 million in exposure. But again, those are guidelines, and 30% of the loans that Angel Oak closes don't meet our guidelines. Stacy was able to get 10 properties done for one borrower and get cash out on those properties or refinance, as Andy mentioned, at a hard money. So we were able to get a 10-pack done for a borrower that was really outside of our guidelines. So those are great opportunities. So currently, okay. Any other highlights here? I know we're half past the hour. We still have a lot of programs to cover. Anything else, Chris or Annie, to add regarding investor cash flow?
I just think it's an easy program to do. It just doesn't have a lot of conditions. It goes pretty quickly, and it does boil down to the rent schedule. And we also have the feature where we allow no ratio at 75%. So that's something we've been asking for, and we got finally, which is great. So. And
Annie, I don't know if you touched on this. We're not capped on how many properties the borrower can have financed. So once they get 10 with Fannie and Freddie, they're done. They're going hard money. This is another great program to really expand your investor's portfolio. And it allows for the first time investor too, as Annie mentioned, as long as it makes sense and you own a primary. So now we're gonna get to our foreign national program, because we rolled this out about a month ago. And Annie, can you just give us some highlights, because it falls under our debt service coverage. So Roberto, pay attention. This is what you asked for.
Yep. So foreign national program. So this is designed for your borrowers. They do not live in the United States. So they cannot have United States citizenship. They must be a citizen of a foreign country. And this will allow them to do a purchase, or we can do a refinance for them. But it works just like our investor cash flow program. So same thing, we're going to use the market rent from the appraisal. Mortgage payment cannot be or over that market rent. One area that is different from the investor cash flow program is we do not allow for the no DSCR option. So if they do not DSCR, then we got to do something, either buy down that rate or bring in more of a down payment. They do need a valid visa. So we do have a list of visas that are acceptable that your AE can provide for you. And, a few highlights of this program or stipulations is the max we could do is up to 70% LTV. And then this is another big one. If you are working with this borrower, funds for closing, down payment and closing cost must be in the US for 60 days. So they do need to have a bank account in the United States, or we will also allow maybe escrow or their closing attorney to hold their funds, but they do have to be in the US. Actually, I believe 30 days. Let me double check. We might have changed that guideline. It used to be 60, but then, nope, 60. Oh, okay. We source and season the funds for 60 days, have to be in the US for 30 days. So all the funds for the reserves just have to can be in their foreign account. So super easy program. So yeah, let us know your questions.
Yeah, a lot of, just really a lot of very, very similar to the traits of our debt service coverage. It's just a foreign national. And I think Andy did a great job covering that. So again, get with your account executive. If you don't know who it is, we'll get you in touch with them before end of day tomorrow. Again, this is being recorded. If we don't answer your question, we will get your questions answered for you. So let's move on to one of our full doc programs here, Chris. We're going to move on to our platinum program. Go ahead, Chris.
So our platinum program is a full doc program. There is also an asset qualifier, which Annie's going to talk about in a minute. But it allows a borrower to get a full doc loan that doesn't traditionally qualify for what would be like a prime jumbo product out in the marketplace. Rates are, real reasonable. We have some really cool features of this loan. One of them that I like in particular is we go to 95%. We don't have any MI on this loan, and we can go up to $3 million. We can go to a credit score as low as 660. We also allow cash out. Most of these loans are jumbo, in the jumbo category. They're kind of fallout from jumbo. So usually why we're getting this loan is either because of it's a high LTV or it's a credit issue that's drawing the loan to us. But it's pretty flexible. If you're not getting the qualification that in your prime jumbo product, this is a really good one for that.
Yeah, and I think, just to add on to what Chris mentioned, it's the 95% LTV, one loan, no MI, and it's probably that seasoning from that bankruptcy and foreclosure where it's anywhere between 7 years and 4 years. That's where we pick up a lot of this business. Annie, anything to add regarding platinum or?
One of the features that I love on this program is we do use the primary wage earner's credit score. So I get a lot of scenarios where we have to use the income from the co-borrower, but their credit score is much lower and it doesn't qualify them. So this is able to qualify them off the primary wage earner. And then also for me, since I'm up in Seattle and I'm in Techville, is RSUs. So our underwriting guidelines for RSUs is the same as commissions. So we just have to see a 2-year history and then we can use them as well. So big selling points for that program.
Yeah, that's a great point, Eddie. That spouse, maybe you need that income and their credit maybe isn't, traditional jumbo worthy, using that. I gotta be honest, I didn't know that, Andy. So thank you. You helped me too. So let's talk about our other full doc program. Annie's gonna talk about Portfolio Select. Go ahead, Annie.
Yeah, so Portfolio Select, another full doc program. But what I like about this program, our credit scores go down to a 600, 620 for a cash out. So in fact, I am closing a loan, jumbo purchase, borrower had, I think, like a 625 credit score, 990 loan amount. So this is going to be your jumbo loan for that borrower. Maybe they have that recent credit blemish. 2-year seasoning on your foreclosures and on your bankruptcies. So that's what this loan is designed for. Just your borrower with more recent credit events and a jumbo loan amount down to a much lower credit score.
Yeah, Chris, I know you have a loan officer who's been working with Angel Oak for a really long time. He called them 2-for-1 loans, right?
Right.
So you get the borrower in this who has maybe that credit blemish, and as that blemish gets further and further away, you can maybe put them in the platinum program, or maybe take them conventional. Either way, do not say no to these borrowers. I will tell you this: non-QM borrowers are becoming very astute. Obviously, the self-employed borrowers, they're resilient. They will find a way to get this deal done. It's even the credit challenge borrowers. They reach out to us on a daily basis, and because they've been told no, or maybe a loan officer decides they don't want to work with maybe someone who's had challenge credit or doesn't know about working with Angel Oak. So do not turn these borrowers away. They will be forever grateful to you for the rest of their home buying career. So let's talk about, Chris, let's talk about another brand new program, literally fresh off. Let's talk about our I-10 program, Chris. So Roberta, this is the other question you had regarding foreign national. We covered. Let's talk about I-10.
So this is we've been so excited to see that we have this program now. This is for the borrower that lives in the United States that does not have a social security number. They have what's known as an I-10 number. We now allow that loan to go up to 75%. It actually fits into our Portfolio Select program. We also have a cash out option to 70, and it's just perfect for that borrower that has been working hard and has a good job, wants to get a loan but only has an ITIN number. Most of the other qualifications are similar. Has to be a primary residence. We can go up to 50% DTI. We also allow condos and sometimes non-warrantable, and 1-unit properties.
Yeah. So again, this is anything to add here, Annie, regarding our ITIN? Literally this program rolled out in the last 30 days, so we're all just getting our feet wet with it. But I think this has got a real long future, and they are great borrowers.
Mm-hmm.
So we're 20 minutes to the top of the hour. We promised you guys an hour. We really do want to keep this moving. Again, we will get questions answered for you. We're going to have Annie cover her. Annie does this. She covers this program so well. So Annie, cover our asset qualifier program.
Okay, this is another one of my favorite programs. Again, I want to tell you what we do not need on the 1003. No employment on the 1003 and no income on the 1003, because we are not going to be reviewing any type of income. So this loan is for that scenario that everybody's heard. They have all the money in the bank. They could buy the property outright, but we cannot get them qualified for a mortgage. So this is that program for them. So how it works is we can use their assets to qualify. So we can use money in investment accounts. We can use money in their 401ks, IRAs, and now we can even use money from their trust accounts as well. So as long as they have enough funds to cover the purchase price, 6 months reserves, and then 5 years of their monthly liabilities. And what we're going to derive the monthly liabilities from is going to be everything from their credit report. So for example, if they have $1,000 of monthly liabilities on their credit report, then we need to see $60,000 in assets. So very easy program. The minimum we need to have is $500,000 after the close of the transaction. If they are doing, let's say, a purchase consecutively, if they're closing on their current home, buying a new home, I can use the funds from that towards the down payment as well. So a lot of the borrowers that I am seeing on this product are newly retired borrowers, where they do not want to go into their retirement accounts. They don't want to start drawing to show that income. So very popular program for newly retired. And then second of all, also up in the Seattle area, being so tech heavy, is, I've seen a huge wave of people that are saying, I'm done with Amazon, I'm done with Microsoft, I'm done doing the corporate gig. Yet they've been with these companies for 20 years and they have a load of stock. And they're like, I'm going out, I'm starting my own business. I think I've closed like 5 of these loans already this year. And they go to apply for a mortgage and they're like, oh, you've only had your business for 5 months, but they have all this stock. So this one we could do a purchase, we can do a cash out, and we could do a rate term as well. So I've even done a few cash outs under this program for people who they started their own business and they just wanted to have some of that extra leverage. So really good program. Just keep your eyes out, especially if you're talking to a real estate agent. Oh, they're having a super frustrating time. They have all the money in the bank, but we can't get them qualified. Dead ringer for an asset qualifier loan.
Yeah, and obviously all of you are on this call to learn more on how you can grow your business, from today on, and obviously working with Angel Oak. You see from Annie, you see from Chris, we've got 80 plus account executives across the country that are seasoned and willing to help you grow your business in the future. So find out who your account executive is, and we will help you grow your business from here on in. Chris, anything else to add? Asset qualifier?
I mean, it's just another great way to, a lot of borrowers maybe that change jobs, but just have really good assets. It's one of the easiest loans to do. Not many conditions. Everyone that I've done has gone really smoothly and quickly.
Yeah, I think outside the box, maybe it's someone who just, went through a divorce and got a lump sum payout and is looking to, get back into home ownership. So think really outside the box when you are trying to market yourself versus, the traditional loan officers marketing, hey, I've got great rates and I've got, fast service. So these programs can help you get a lot of conventional business, and we'll talk about that here. Chris, you know, we've had a lot of questions about rates. We've had a lot of, you know, what's the rate? What's the LTVs? Let's talk about this great tool we have here, Chris. Quick quote.
So Quick Quote is awesome because you can access it from anywhere, even your phone. You don't need a password. You don't need a user ID to get in, and you can get an instant quote in seconds. So we have just a number of drop down, and we're doing one right now, kind of a scenario. But you go to our homepage, you click on non-QM Quick Quote, and you start by starting with the loan amount, the credit score, the loan to value, housing history, which is housing history. Basically want to know how many lates they've had on a mortgage, if they've had any. And then the income documentation is really key. And you can change this. You can go from full doc to bank statement if you want. You can go to DSCR and just kind of get a pricing comparison of the different loans that we offer. Quick Quote you can put in a desired scenario, and a lot of times it'll give you a counter of what it qualifies for, which is cool too. But in this case, we're doing a bank statement loan, and you can see the FICO score and the LTV, and look, you've got a rate here in the upper threes. That loan also qualifies up to 90. Of course, the rate will be higher. It also tells you some basic program guidelines, like the reserves, the lock duration. It also tells you a little bit more below about the loan program. But it's the fastest way to price a loan.
Yeah. So yeah, Chris. Yeah, and Chris and Annie are, you know, troopers. They're available probably 24/7. But this is available 365. They might take a day off. So, but this is available, you know, 24/7, 365 days a year. And it's really easy to use. As Chris said, there's no credentials. Chris, let's take them through, obviously, our second most popular program. Let's take them through our debt service coverage here.
Okay. So in this case, we're going to go DSCR, and then make sure you click on investment. And that's going to give you the pricing at 80%. Now, keep in mind, if we wanted to do, let's say, a no ratio, that's not going to show up on Quick Quote, but those are things you can talk to us about if it falls a little bit outside of what Quick Quote offers. But you could change the LTV on this. Also, the number of units can also affect the price. And a lot of times we do get like 3 and 4 unit properties. But it gives you a good, and then below it also talks about on investor cash flow, the prepayment penalty, how to buy out of it. You can buy out of it all the way down to 0 if you want, or you can take it to a 1 or 2 years. But standard is 3.
Yeah, so, you know, a lot of questions came over on rates, and, you know, I'm amazed by this. So a 4-unit purchase, 25% down, a 4.5% 30-year fixed at par. That's impressive. That's really, really impressive. Versus telling the borrower to go get me your tax returns and to give me all your lease agreements, your canceled checks. This is no job, no income, only on how that subject property is going to cash flow. Crazy, crazy good. Crazy.
And I'm not sure if conforming rates aren't much better than that. So
exactly, Chris. Exactly. So, Annie, anything to add regarding, you know, we're coming 10 minutes to the top of the hour. Anything to add, you know, regarding our Quick Quote tool?
Biggest thing that I want to know on the Quick Quote tool is when it is pricing out at the par rate, please be minded that is the par rate without any of your comp built in. So reach out to your account executive, find out what your comp plan is, because we do lender paid, we offer YSB, so that way you can be quoting the right rate. So I always point that out to my brokers all the time. This is bare bones.
Great point, Annie, and it's a 2-for-1. So if your comp plan is 2 and you want to put it in the rate, you're going to add 1 point to that par rate. Still 5.5, you making 2, pretty good, right? So I know, Andy, we've had a lot of questions regarding our marketing. I know, Ari, we're getting here for you, Ari. Give us a minute. So Annie, talk to some of our marketing tools that we have available.
Yes. So marketing is one of my favorite things to cover. So first thing, let's go down to flyers. So for those of you that are looking to expand, hey, what kind of marketing should I do? So I'm going to give you some feedback, especially with some of my brokers in the business have been doing for a long time. Brokers have been doing this for 6 or 7 years already. So these are a bunch of flyers that you can actually go through. And let's click on bank statements, John.
Yep.
And so these cover all of our programs. And we do have some in Spanish. We do have some geared towards your realtors, but it's super easy. All you have to do to make this custom is where it says left logo. You can click on that left logo, upload your own, click update, fill out all your information in the left-hand side, go ahead and click update. And then that's going to update that PDF and all of your information. So that way, if you want to do some emailing or maybe do office calls, you can let your team know, everybody you're reaching out to, I have access to these programs. So flyers is always a good way to get the word out there. Yep. So let's go back to our marketing portal and then social media. So social media, I cannot stress this enough. My brokers that have started social media campaigns bring me the most amount of business. And they tell all the time through LinkedIn, through Instagram mostly, they are always saying updates. Hey, I can do a bank statement loan at 90% to a $2 million loan amount. They've done a really good job on their LinkedIn profiles, especially linking in with real estate agents, bank LOs, working those referrals coming in the door, and they're posting this stuff 2 to 3 times a week. And as we always know, stories sell. So they're not always posting, hey, I got a bank statement program, I got a DSCR program. They're posting, hey, I just closed on, this is what I did for this borrower today. This is why they did not qualify conventional. This is the program that I put them in. I got them $500,000 cash out. I can help you. Reach out to me today. So they're selling the stories of the loans that they're also closing via social media, and they get a lot of referrals. Especially as we were talking earlier, these borrowers, by the time they come to you, some of them have been turned down 4 to 5 times. I had a loan officer I was working with once. We did a bank statement loan for them. He owned a company. She actually ended up getting about, I think, 5 to 6 referrals, she told me, from his employees that were all easy peasy conventional borrowers. So especially, what was that ratio you told John, like refinances are going down? Where am I going to get my business?
62%. Yep.
These borrowers will send you referrals because they are so thankful that you took the time to work with them and show them like we can get your loan done. Another area is, let's go back to the marketing portal.
Yep.
Because as John said, we're here to help you grow your business, and we truly are 100%. So let's go to presentations. So here we have Realtor Presentations that are already put together for you, but we're going to take it a step further. You are not a subject matter expert. I am. Chris is. Your local AE is. If you are presenting in front of realtors, please include us. Stories sell. We will get on there. We will tell the guidelines. We will help build that comfort between you and that realtor. We will tell them about the loans we close and how many we close. So that way they know they have that guarantee that they are working with experts. And if they send you the loan and if we issue that prequal, this loan is going to close. Our goal is help make you an expert, and we're going to do that in a partnership together, and we're going to build your business together. So please include us as you are building your business if you are doing these presentations. It is what we are here for and what we love to do.
Yeah, Annie, great. And Ari's, I'm going to do it. Ari's going to tell people, hey, do a bomb video and post it out for social media. So Ari, I'm going to get with you after this call, because you, me, and Stacy are going to get together, and we're going to do one of these realtor presentations for you on your behalf. But it is the most powerful presentation that you will deliver to realtors out there. I've been a part of a ton of these, and I bet if you get 10 realtors in a room, you will get one of their loans, because you're educating them on a way that they can close their loan without having to provide tax returns. Chris, any success stories regarding any realtor presentations you've done on behalf of your client base?
Well, I will say every single one I've done, we have had a realtor in that presentation do their own loan. It's almost guaranteed. It's almost predictable. And not only that, but when they do their own loan, they believe in the product. So they're gonna, and realtors are the first line of defense. If they talk to a prospective buyer, the buyer says, I don't qualify for my tax returns, they're not gonna talk to that buyer. If they know they have a bank statement loan option, now they have all these new buyers.
Yeah, Chris, you mentioned that there, and I really just want to add to that is, as much as we may like it or not, realtors kind of pre-screen your buyers, right? So if they hear that, hey, I write off everything on my taxes and all I make is $50,000 a year, versus we can increase their purchasing power maybe up to $200,000 or more, right? And not only that, oh, I had a bankruptcy less than 4 years ago. Well, that realtor may say, there's nothing out there in the conventional world. So get with Annie, get with Chris, get with your local account executive, have them do this presentation on your behalf. I promise you, you will not be disappointed. And as Annie mentioned, how are you going to replace that 62% reduction in refis next year? It's really, we're here to help you grow your business. So I know we're getting near the top of the hour. A lot of great questions, a lot of great participation. This is going to be recorded. It will be sent out to you before end of day today. If there was a question, there was a ton of questions. So really thank you for your participation. If there was a question we didn't get to, we will get that out to your local account executive and get them in a conversation with you. So Chris, any last parting words?
Don't forget financial planners, attorneys for referral sources. I mean, financial planners, who knows better that does not qualify for a loan than a financial planner?
That's a great point, Chris. Instead of them taking 20% out of their investments and putting 20% down, maybe it's only 10, maybe it's only 5. Great point. Annie, I'm going to let you close for us.
So as I mentioned earlier, stories sell. And so I always like to tell a story of maybe a recent, a loan that I just closed. And I worked with a borrower. They were an immigrant to the United States, built their business from scratch, and they entered into a contract to buy a new construction property. When they entered into the contract, their tax returns were perfect. But this construction build was over 12 months. So during that time, their CPA had done wonders on their tax returns. Borrower goes to close, they no longer qualify. Borrower is in this transaction, $300,000 of their own money is on the line. We all know how builders can be. They can be very unforgiving. So thankfully, the broker, they reached out to me and we were able to fit this borrower into the loan, actually get it still closed on time. Builder was not going to be very forgiving. And that's what's amazing about working with the team at Angel Oak. We closed this loan in probably about 3 weeks. So it was a tighter timeline, but I was able to work with my team on the inside and we were able to get it through within that time period. So that's just what I love about working with this company. It's also what I love about having all these different options for the borrowers. Even today, we discussed our foreign national loan. We discussed our ITIN loan. And we're always coming up with more and more ways for these borrowers to qualify, because at the end of the day, it's about the borrower and it's about fulfilling their dreams. And that's what we're here for. And that's why we all work in this industry, because as stressful as it can be, especially when you guys go to those closings, and that's something we don't get to attend as AEs. We don't get to attend the closings at the AEs. And I love it when my LOs call me and they're like, Annie, they were crying at the closing table. They were so thankful. So especially as we go into this holiday season and we have so many things to be grateful for, just remember, especially 2022, is you literally have the ability to change somebody's dreams with these programs, and so much to be thankful for and so much to be fulfilled for. And that's really what we do every single day, and what our team does and what our underwriters do and our account managers and our closers and our management all the way up to our CEO. And so just be a part of that with us.
That's it. Thank you, Annie. You're wonderful. Chris, thank you. Everyone out there, have a safe, happy, healthy holiday. Thank you, Annie.
Thank you.
Thank you, guys.